In 1637, a single tulip bulb sold for more than a mansion in Amsterdam. Not a bouquet, not a garden's worth. One bulb, one flower. And when the market crashed weeks later, it destroyed fortunes and became history's first recorded economic bubble. This is the story of Tulip Mania, the time flowers became more valuable than houses. It's the early 1600s. The Dutch Republic is experiencing its golden age. Trade is booming. The Dutch East India Company is printing money. Amsterdam is becoming the financial capital of Europe. The middle class is growing, and for the first time, ordinary people have disposable income. They're looking for ways to display their wealth. Enter the tulip. Tulips weren't native to Europe. They'd been imported from the Ottoman Empire. They were exotic, colorful, and rare. Owning tulips became a status symbol. But here's what made tulips particularly interesting. They were unpredictable. Some tulips bloomed in solid colors, but occasionally a tulip would develop striking patterns, flames of color, stripes, streaks. These broken tulips were extraordinarily beautiful. What people didn't know was that these patterns were caused by a virus. It was random and impossible to predict. You could plant 100 bulbs and only one might develop the prized patterns. This randomness made certain tulips incredibly rare, and rarity created value. By the 1630s, tulip collecting had become fashionable among the Dutch elite. Wealthy merchants competed to own the most beautiful varieties. And then something shifted. People started buying and selling tulip bulbs not to grow them, but because they believed the price would go up. By 1636, tulip trading had moved beyond the wealthy. Middle-class merchants, tradesmen, even farmers were getting involved, and the prices started climbing fast. To put this in perspective, a skilled craftsman in Amsterdam earned about 300 guilders per year. A nice house cost around 1,000 guilders. At the peak, a single bulb of Semper Augustus, the most beautiful tulip in existence, sold for 10,000 guilders. That's more than 30 years of wages. That's 10 houses for a flower bulb. People were selling property, liquidating businesses, borrowing money, all to buy tulips, because everyone believed prices would keep rising forever. Here's where it gets stranger. Since tulips only bloom in spring, most winter trading involved bulbs still in the ground. People were trading contracts, promises of future tulip bulbs that didn't even exist yet. You could buy a contract for a tulip bulb, then sell that contract at a higher price, and never actually touch a tulip. It's essentially a futures market, the same financial instrument modern traders use for oil and wheat. Except in 1636, the Dutch were doing it with flowers. Taverns became trading floors. Men would gather, drink, and trade tulip contracts. The Dutch called these gatherings collegiums, and they were happening in nearly every major city. And then, in February 1637, it all collapsed. Nobody knows exactly what triggered it, but once the crack appeared, everything fell apart. Within days, buyers stopped showing up. Contracts were being broken. Sellers panicked and dropped prices, but the buyers had disappeared. A bulb that sold for 5,000 guilders in January was worth 50 guilders by March. Then 10, then nothing. Fortunes vanished overnight. Merchants who'd mortgaged their homes now owed money they couldn't pay. Families who'd invested their life savings were ruined. The Dutch government tried to intervene, allowing contracts to be canceled for a 10% fee, but the damage was done. And here's what's fascinating. The tulips themselves didn't change. They were still beautiful, but the collective delusion that made people believe a flower was worth more than a house, that evaporated. Tulip Mania became history's first well-documented speculative bubble. It demonstrated that markets driven by emotion, rather than intrinsic value, can become completely detached from reality. But the lessons didn't stick. In the 1700s, the South Sea bubble wiped out investors, including Isaac Newton. In the 1920s, the stock market bubble preceded the Great Depression. In the 1990s, dot-com companies with no revenue traded at billion-dollar valuations. In 2008, the housing market collapsed. And today, cryptocurrencies, NFTs, meme stocks, markets still driven by speculation and the belief that prices will keep rising forever. The mechanics change, the assets change, but the psychology remains the same. Tulip Mania showed us something fundamental. When everyone around you is getting rich, it's almost impossible not to join in. Fear of missing out is more powerful than rational analysis. But here's what most people get wrong. Tulip Mania didn't destroy the Dutch economy. The Dutch Republic continued to thrive. The people who were ruined were mostly individual speculators. That's the lesson. Speculative bubbles can destroy individual fortunes without collapsing entire systems. Tulip Mania also revealed something about perceived value. The price people paid had nothing to do with the tulip's intrinsic value. It was entirely based on what they believed someone else would pay tomorrow. This is true of many assets. Gold is valuable because we agree it's valuable. A dollar is valuable because we trust the system. Art is valuable because the market says it is. Tulip Mania was an early, dramatic example of what happens when that collective belief shifts suddenly. So what happened to tulips after the crash? They became flowers again. The Netherlands is still the world's largest producer of tulips today. Millions of bulbs are exported annually. Tulip fields remain a major tourist attraction. But they're no longer speculative assets. They're sold for a few euros per bulb, not thousands of guilders. Tulips went from priceless to worthless, back to reasonably priced. All because the market's psychology changed, not because the flower itself changed. And that's the ultimate lesson. Markets are made of people, and people are driven by emotion, fear, greed, and the terror of missing out. When those emotions align, prices reach absurd levels. And when they shift, the collapse is swift and brutal. Tulip Mania wasn't uniquely Dutch. It was human nature, revealed under specific conditions. A new market, a growing middle class, and a rare commodity people didn't fully understand. The same pattern repeats throughout history. The same mistakes get made, because each generation believes this time is different, but it never is. If this changed how you see economic bubbles, subscribe. History doesn't repeat, but it definitely rhymes. And the next bubble is already forming somewhere.